We're getting lots of volatility in all markets right now, so I think we better convert over to the weekly charts, maybe get a little bit better idea of what the big picture looks like. So I'll start with the stock market. This is the first time since this rally began that the S&P has at least breached this 10-week moving average. If we close below it, then yes, we are due for a daily cycle low, but also, the market has just been propped up way too long to get it into the last FOMC meeting. So we've got a weekly swing. The oscillators are starting to uh, move down out of overbought conditions. Um, Closing below this 10-week moving average tomorrow would be um, a sign that I would have to take as probably an indication that an intermediate degree decline is beginning. So um, even though we're due for uh, possibly a daily cycle low, I think we need to be careful here on the off chance that we're going to get just a really stretched daily cycle that turns into an ICL. So I, I don't think I'm ready to try and pick a bottom in the stock market, not with the weekly charts looking shaky right now. Pictures more bearish in the Dow. You can see we are below the 10-week moving average, and the 10-week moving average has rolled over and is starting to point down. Um, I'm going to take that as a warning sign that the stock market is trying to roll over into an ICL decline. So, um, just another red flag. Moving on to the leading tech sector, we've got a false breakout here. Um, the NASDAQ is, unless we get, a 90-point rescue tomorrow, then we're going to close the week below 8,000. Again, we've got at least a breach of the 10-week moving average here. So nothing there to inspire me to want to try and pick a bottom right here. I'm going to use UUP as a proxy for the dollar. We've got a break of the cycle uptrend line, and the dollar is not holding above the 10-week moving average, which has turned down. Again, with the caveat that these are the most manipulated markets on the planet, it looks to me like the dollar has started moving down into a daily cycle low. In theory, that should be good for gold. All right, moving on to gold. We've got our first test of the 10-week moving average, and the average is maybe starting to flatten out. We've also got a weekly swing, and we're 38 weeks into this intermediate cycle. Again, clearly there's a bank that's stuck on the short side here, and they're trying to prevent gold from rallying. But with the dollar probably starting down into a daily cycle low, and how late it is in this intermediate cycle, weekly swing, first test of the 10-week moving average, that we may finally have, the first time where we can say that, this time is different. This time the banks may not win this battle. So, we're going to have to see how we close tomorrow. I suspect that the banks will try very hard tomorrow to prevent gold from closing back above this 10-week moving average. But the fact that gold has even tested the 10-week moving average is probably not a great sign for the bank or banks that are caught on the short side of this market. Also, if I widen this chart out a little bit, you can see the gold has come down and it reached oversold on the weekly charts and is now bouncing. It's, there's definitely a possibility this was the bottom of the intermediate cycle here. Um, Next week may tell us the tale if gold can get back above this 10-week moving average. But positive sign here, I think. Gold did not, the weekly charts did not stay oversold like they did right here as the CRB was moving down into its 3-year cycle low. So possibility anyway that this is marking an intermediate cycle low, and gold is just struggling to overcome the interventions that's trying to prevent it from rallying. Now moving on to JNUG, the triple leveraged junior miner ETF. This looks like capitulation type volume to me. This could be a bottom. We're oversold on the weekly charts, and in any other market, this kind of a candlestick would be almost certainly a bottoming sign. We didn't get follow through to the downside after last week's big decline. In fact, we've at the top of the rally this week, we've recovered more than 50% of the rally. So if we end the week with the candle looking like this without coming down and making serious new lows, this would look like a bottoming candle to me. And we've got the that same look on the majors on GDX. Just does not look like a weekly chart that's trying to follow through to the downside. This looks like a weekly chart that is trying to break that downside momentum, and we're oversold on the weekly RSI. RSI is trying to turn up, so we may have a resolution to this next week. Especially if next week turns out to be a positive week and we're back up here in the 21 area. But again, any other market, if this was the market of the S&P or oil or anything else, I would say, almost without a doubt, this is a bottoming candle. But we're dealing with the metals, and we're dealing with what I think is a bank that's stuck on the short side. So just a little more caution here. I think we're going to need to see some sign that that a short squeeze has started before we can safely jump back in. But as of today, anyway, this is looking constructive to me. But for now, I think you should just stick with partial positions. We're not ready to back up the truck just yet.